everyone, a very good evening to everyone. I hope you all are fine and doing well. And also, I am hoping that I am audible. My screen is visible. Everything is okay from my side. So, today we are going to start a chapter that is facilities for exporters and importers. In this chapter, we are going to learn that what are the other types of facilities which are available only for the exporters and importer so they can do their business without any problem. What type of finances and everything. We will do some questions today on this chapter, and with the help of the questions, we will brush up our concepts. So I hope that I am audible, my screen is visible, everything is okay. So let's start with the class. And here you have to give answer of every question. That also helps you to check your knowledge regarding the chapter. So let's start with the class. And here is the first question: under which regulatory authority are the financing of export and import trade as well as facilities granted under the FEMA regulations governed? So read the question carefully and try to give the answer. Which regulatory authority are the financing of export and import trade as well as facilities which are granted under FEMA regulations governed? Which of the option is correct here? Is it Ministry of Commerce and Industry? Is it RBI? Is it Ministry of Finance or Ministry of External Affairs? See, when the talk is about financing of export and import trade and all the facilities which are granted under the FEMA regulation, the one and only answer is the Reserve Bank of India. See, you know that reading is not appropriate, reading is not enough to clear your examination. You have to do practice as much as you can because that boosts your confidence and also that helps you to understand that what are your weak areas and what are your strength areas. So let's uh, practice some questions which are related to the facilities for imports and exporters. So first question, I told you that Reserve Bank of India is the regulatory authority which finances the export and import trade and also facilities granted under the FEMA regulation. This is basically the regulatory authority which is completely responsible for what? For financing of export and import trade, right? You can take example like pre and post shipment finance or export credit. If some exporter is any exporter wants some credit regarding to their uh, export, so they can take from the RBI, right? And also pre-shipment and post-shipment credit facility is also available. Apart from this, here administrate administration and regulation under the FEMA because it includes facilities which are related to the foreign exchange transaction. And there are other ministries that plays policy or diplomatic rules, but they do not directly regulate foreign exchange uh, or trade financing. So which option is correct here? Here our option B is correct, that is Reserve Bank of India. And also you can tell me let me know in the comments that you want theory or you want only the questions. So next question, in which situation may an authorized dealer accept export documents which is submitted by the exporter after the specified period of 21 days? Who are the authorized dealers? Who have the license to deal in the uh, foreign exchange transaction, and this license is they got from the RBI. So in which situation an authorized dealer accept the export documents which are submitted by the exporter after the specified period of 21 days? So try to give the answer of this question. If we talk about RBI and FEDAI guidelines, what the guidelines are saying, that an authorized dealer, they may accept the export documents beyond the prescribed limit of 21-day period when when only the delay is due to the genuine reason, which is when the delay is due to the genuine reasons which are beyond the control of exporter. Right. In that case, authorized dealer can accept the documents after the specified period of 21 days. So the correct answer is option D here. Option D is correct. A, B, C options here do not constitute some valid regulatory grounds for the delay. So here option D is correct. Got it? Now, next question. Who is responsible for regulating the export and trade control guidelines for exporters in the India? Who is responsible for regulating the exchange and trade control guidelines for the exporters in the India? And I hope that you know the answer of this. So kindly give the answer that who is responsible. So the four options are given, and which option is correct? Ministry of Commerce and Industry, RBI, Ministry of Finance, या DGFT? Try to give the answer. It will help you to test your knowledge. So the correct answer is the DGFT. This DGFT, Directorate General of Foreign Trade, that works under the Ministry of Commerce. Ministry of Commerce and Industry. This is responsible for formulating and administrating the foreign trade policy. Right? They also issue export import like exempt guidelines, procedures, and also other trade measures, other trade guidelines, other control guidelines which are completely applicable for the exporters and the importers. Now the thing is there that DGFT is doing that work. Who is regulating the exchange and control guidelines? Do you know What is the meaning of this FTP, foreign trade policy? FTP, foreign trade policy. Do you know any overview about this foreign trade policy? See, FTP, we can say that this is a government framework that sets the rules for the nation's uh, international trade, and it also focus how to regulate the import, how to boost exports through incentives, initiatives, and streamlined process. So the correct answer of this question is D, DGFT. Option D is correct. DGFT is the correct answer. Yes, correct, Vishwant sir. D option is correct. Next question. Under what circumstances can the realization period be relaxed, allowing a longer time frame for repatriation of export proceeds? Under what circumstances can the realization period be relaxed, allowing a longer time frame for repatriation of export proceeds? Which option is correct here? See, simple answer. Under the RBI FEMA guide regulations, there are standard realization period for the export proceeds currently is having 9 months, or they may be relaxed in some specific cases. What specific cases? When goods are export to the warehouses, these warehouses established outside the India, right? These warehouses established outside the India for stocking and subsequent sale. In such cases, RBI permits the realization period because because the sale may occur at the later date. Obviously, sale may be occur at the later date. That's why RBI permits an extended realization period. So here other options are not valid because international delay is not permitted, and uh, exporters financial difficulty is not a regulatory basis for extension, and there is no relaxation based on export value threshold. So which option is correct? Option B is correct here. When the goods are exported to a warehouse outside the India. Next question. Which documents need to be submitted within the prescribed 21-day limit for the exports? Which are the documents or the forms are here? Read the option and try to give the answer. Both EDF and soft text. Both forms, EDF and soft text. As per the RBI guidelines or as per the FEMA guidelines, FEMA regulations, EDF means export declaration forms, and this form is required only for the physical goods. Then we have soft text form. Soft text means this is applicable for export of software and IT enabled services. For the IT enabled services and for the soft text form. Now, what is this soft text form? Basically, this is for the softwares, right? And if we say that software technology parks of India, that is having a different we can say work. Softex full form we can say software export declaration form, right? So Softex, and this is applicable for the export of software and IT enabled services. Both forms are required, submitted to the authorized dealer, right? Both forms need to submit it to the authorized dealer within the prescribed limit of 21 days. And IEC forms are for the registration purposes. IEC forms are for the registration purposes, and they are not the part of 21-day export submission requirement. So the correct answer of this question is option C, both EDF and Softex form. Is that clear? Now, next question. In accordance to the FEMA regulation, how must the full export value of goods be received by an authorized dealer? In accordance with the FEMA, how must a full export value of goods be received by an authorized dealer? So simple answer, under the RBI and the FEMA guidelines. Here, the full export value, of goods must be realized and received through an authorized dealer bank in the manner prescribed by the bank and in accordance with the permitted modes of payment. Now, other options here, Option A, cash receipt is completely not permitted for export proceeds. Exporter cannot choose any arbitrary method. It must be comply with the RBI and authorized dealer bank rules. Then personal check from buyers are not accepted or secure mode under the FEMA. So the correct answer is in a manner specified by the authorized dealer. That is the correct answer here. Got it? I hope the things are clear. With the questions, our most of the things are clearing, like most of the concepts are cleared. Still having any problem, you can tell me. And one more thing I want to tell you here, what is the meaning of export proceeds? Basically, these are the earnings or foreign currency an exporter receives when he's selling goods or services to the buyers in the other countries, especially in the international sales. That is called the export proceeds. Got it? Next question. Under what circumstances can the RBI or authorized dealer extend the stipulated period for realizing and repatriating the export value? What circumstances are there? Again, according to the FEMA and the RBI, according to the FEMA and the RBI, basically RBI or authorized dealers, RBI or authorized dealer, they can extend the stipulated period for realization and repatriation of the export proceeds when only when the exporter is able to demonstrate sufficient and reasonable cause for the delay. When exporter is able to demonstrate sufficient and reasonable cause for the delay, maybe the reason is buyer's insolvency, maybe the reason is dispute, political risk. So other options are incorrect here. Payment of a fine is not a precondition for extension. A legal document alone does not automatically justify the extension. Extensions are not automatic and must be requested with justification. So the correct answer is option B, for sufficient and reasonable cause shown. Which of the following is a valid form of receipt for foreign exchange by an authorized dealer? Valid form of receipt. Obviously, foreign currency notes and the traveler's check, because according to the FEMA and RBI, export proceeds must be realized through approved banking channels like foreign currency notes and traveler's check, and these are recognized as the receipt. These are recognized as the receipt by authorized dealer, but some regulatory conditions are applied. If we talk about the bitcoins, they are not recognized as a legal tender or permitted mode under the FEMA. And jewelry, this is not a valid, and artwork, not a permitted mode of settlement. So the correct answer is option C, foreign currency notes and the traveler's check. Got it? So under what conditions can agency commission on exports be allowed either by remittance or deductions from the invoice value by the authorized dealers? Under what conditions can agency commission on export be allowed either by remittance or deduction from the invoice value by the authorized dealers? Again, according to the RBI and FEMA guidelines, agency commission on exports may be allowed by the authorized dealers, right? Agency commission on exports, these are allowed by the authorized dealers either by the direct remittance or deductions from the invoice value. And this is possible when the commission is properly declared in the EDF soft text form and accepted by the custom authorities. So this obviously ensures some types of transparency and regulatory compliance. Basically, other options are incorrect here because authorized dealers request alone is not a regulatory basis. Shipment scheduling has no relevance to commission approval, and cash payment of commission is not permitted. So the correct answer is option B, when the exporter declares it in the EDF soft text form and it is accepted by custom authorities. So option B is correct here. Next question. How the discount rate for prepayment of usance bills typically stipulated in export transactions? How the discount rate for prepayment of usance bill typically stipulated in export transactions? See, generally in the export bills, when the usance bill are prepaid or discounted, so the discount rate is typically stipulated at a fixed percentage of invoice value in the contract or commercial terms. In the contract or the commercial terms, because this rate reflect interest for the usance period or bank charges and discounting cost. And the other options are incorrect because seller preference alone does not determine the rate. Buyer request is not governing factor and DGFT does not fix the discount rates. So the only correct answer is option B, at a fixed percentage of the invoice value. Next question. What condition must be met for banks to allow the claim against export bills? What are the conditions that must be met for banks to allow claims against export bills? So which option is correct? Here, according to the RBI and FEMA guidelines, basically we can say banks are permitted to entertain the claims. Banks are permitted to entertain the claims such as deductions, short payments against the export bill only after the export proceeds have realized and repatriated to the India. right? This ensures that foreign exchange inflow is secured before any claims are settled. So, which of the option is correct? Option B is correct. The export proceeds have been realized and repatriated to the India. Option B is correct here. Next question. What additional condition must be met for the approval for reduction in invoice value by the authorized dealer? What additional condition must be met for the approval for of a reduction in invoice value by the authorized dealer? Which of the condition is correct? See, most important thing is that according to the RBI and FEMA, authorized dealers, they can approve a reduction in the invoice value, right? They can approve, but according to the some condition. In addition to the limit on the percentage of reduction, that exporter must not be in the RBI caution list. Must not be in the RBI caution list. Exporters who are there on the caution list, they are subject to enhanced security and as well as restrictions. So basically, other options are incorrect because option A is saying seller discretion alone. It is not valid regulatory basis. And in the B option, standard regulatory cap is not 5%, it is 10%. And reductions are case specific, which are not mandatory for all exports. So the correct answer is option C. The exporter should not be on the exporters caution list of the RBI. Option C is correct. Now, when should an exporter apply for an extension of time limit for realizing the export proceeds? When should an exporter apply for an extension of the time limit for realizing export proceeds? See, what guidelines say? Exporter should apply for the extension of the realization period when they are unable to realize the export proceeds within the given time, right? uh, and for those reasons which are genuinely beyond their control, like buyer default, disputes, political risk, insolvency. So here we can say that which option is correct? Option C is correct. If the exporter is unable to realize export proceeds within the prescribed period due to reasons beyond their control. Next question. What condition must be met to grant an extension of the time limit for realizing export proceeds beyond 1 year from the date of export? Beyond 1 year from the date of export. So in that case, which condition is required? See, that is also allowed by the authorized dealers. But the condition is that exporters total outstanding total outstanding that should not exceed US dollar 1 million or 10% of the average export realization, and in which they take the time of 3 previous financial years. So whichever is higher, they will take it as a reason. And this condition ensures that extensions are granted only to exporters who have a good record, and also they are able to manage the outstanding exposure. So the correct answer is option D. What is the effective date of realization of an export bill which is denominated in rupees according to the FEDI rules? FEDI, which is in self-regulatory organization, their rules for exports bill are denominated in Indian rupees. The effective date of realization is considered to be the date on which foreign bostro account is debited. So obviously, overseas buyer actually leaves the foreign bank and it is reflected on authorized dealer's bank account. So the correct answer is the date on which the bank Vostro account is debited. Now, just a minute. Yeah, which what is the key difference between factoring and forfeiting? I think the most important concept in this chapter, factoring and forfeiting. So what is the difference between factoring and forfeiting? See, here, if I tell you one thing, that what is the meaning of this factoring? Factoring is basically a type of facility in the export and import thing, and the difference of this factoring and forfeiting, that lies in the risk assumption and recourse. Factoring can be done with recourse or without recourse. In recourse factoring, exporters bears the risk if wire default, and in non-recourse factoring, the factors assumes the credit risk. But what is the meaning of this factoring? What is the meaning of this factoring? Factoring is a type of method where business sells its unpaid customer invoices to a third party at a discount and gets the immediate cash to improve the cash flows, instead waiting for the customer payments. So forfeiting is always without the recourse. Forfeiter here assumes the full risk of non-payment from the importer, and it is backed up by the letter of credit, bill of exchange, or promissory notes. So that's why we can say that factoring allows recourse option while forfeiting only has without recourse. Right? Now, export financing is designed to make finance available to export at what kind of interest rates? Four options are given. Which option is correct here? See, this export financing is designed just for the exporters, right? Why? So exporters can get the support and they can compete globally, right? And to achieve this, whatever the finance provided is offered at the interest rate which is comparable to those which are available in the international market, which can include pre-shipment finance and post-shipment finance. And it ensures that Indian exporters are just a not at a disadvantage. Why? Because due to high domestic borrowing cost. So here we can say that according to the option, internationally comparable interest rate is the correct answer here. Now I am giving you some questions in homework. Just read the questions carefully and do these questions and do the comment down, and also write about that you need theory or MCQs. So you can tell me this thing in the comment section, and if you have any problem, do the comment below. I will be there to solve your doubts. And if you like this video, kindly give the like, subscribe to the channel, and also share your thoughts too. So thank you so much. Let's meet in our next class. Till then, take care and have a good day. Thank you.